Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christian Lee. Joining me are my co-host, CoinDesk contributor, Lawrence Luton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Taking a look at Bitcoin, the CoinDesk Bitcoin price XTX index currently at $23,110, up about 0.6%. The CoinDesk Ether price ETX index at 1674, also in the green, of just over 2%, and the DFX CoinDesk DeFi index at 145. Positive territory, over 2%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, just globally as leader in crypto news, events, and data. So taking a look at the markets, and law firm Sullivan and Cromwell, they are the representatives for FTX. They're billing $7.5 million for their work on the FTX bankruptcy case in November. A period covering just 19 days, a Tuesday court filing shows.
Okay, it's 19 days, but it's not like 40-hour weeks here, right? It's not like 8-hour days. This is dozens and dozens of partners and other attorneys and other support staff, et cetera. It came out to about 6,500 hours. Calculates to about a little under $1,200 an hour. Look, it's really tough to do this in the Bahamas. First of all, they have to get hotels in the Bahamas. They have to get food. They have to work out, and it's a very tough place to work out of, the Bahamas, especially in a month like February.
I wonder,
but they. Yeah, it's
how much
it's
money
difficult.
are they recovering? Compared to what they're
fly
billing.
there. They have to fly there, and it's actually the 7.5 million is a fraction of it's 80% of what they were asking for. But we also have to remember, like I said, it's not like it's 80 hours one lawyer. This is a whole bunch. There's a whole bunch of people who have to unwind this. So in all fairness, it's coming out to about $1,200 or so per hour. Still a lot of money. This isn't cheap. But you know what else isn't cheap? Fraud. Just saying.
Fraud is not cheap at all.
No. So you pick your poison. Don't put your money with a fraudster.
The idea here is to recover as much money for the creditors, which would be tough if the legal fees used in pursuit of that
something is better than
quite
nothing.
As large as that.
Something is better
Emily,
than nothing.
You're following developments in Turkey. What's going on there?
Yeah, so as I'm sure many people know, Turkey has just suffered from a major earthquake, but there is an interesting crypto aspect to this story. Basically, Turkish nonprofits have raised, I believe, now more than $3 million in crypto for earthquake response. And our next guest will talk about this in more detail, but this is interesting for various reasons. One, because it's an actual use case for crypto at a time when there is a lot of skepticism of crypto, but it's particularly interesting in the Turkish context because Turkey, while it is a major market for cryptocurrency, one of the largest in the world, there are some restrictions on how you can use cryptocurrency. For example, the government has restricted cryptocurrency as a form of payment, but are apparently relaxing that in the wake of this current emergency. So joining us to discuss this in more detail is our wonderful colleague, CoinDesk Turkey Editor-in-Chief, Serdar Turan. Welcome, Serdar. So nice to see you.
Great to see you, Emily. Thank you.
So, all right, well, I hope everybody, is okay. I know you're in Istanbul, which is thankfully far from the earthquake epicenter, but we extend our best wishes to you anyway. Tell us what's going on in Turkey. Just give us a rundown of these latest developments, which in some ways are quite surprising.
Yeah, actually, Turkey is not very much unfamiliar to the earthquakes. We have been having significant earthquakes every 20 years or two. And also, there is an expectation of a very severe earthquake in Istanbul as well. So this is a very unfortunate event. We have been seeing a lot of damage in the southeastern part of Turkey. It is an area of more than 10 cities. According to the official numbers, numbers. The death amount of the people who passed away is like nearly 9,000, and still we have been waiting for the reports to come. And more than 13.5 million people somehow affected from this disaster. So it's a very unfortunate event. We are okay here in Istanbul, but a lot of friends and relatives are there. So it is a very dark days for Turkey.
Thank you for that update. And we extend all our sympathy to this situation. So let's talk about crypto for a moment,
Sure.
just because this actually is a genuine crypto story. It's not us trying to turn this into a crypto story. So Turkish nonprofits have apparently raised more than $3 million. And I think this is interesting for a variety of reasons, but let's start with the biggest thing here, which is the Turkish regulation, because this is very relevant, right? Turkey does not allow crypto for payments. And my understanding is that the government is sort of waiving that because of this emergency situation. Can you just explain that to everybody, what's going on?
Sure. As you have already mentioned, Emily, Turkey is one of the largest markets for crypto adoption and crypto investment base, if I may. And the Central Bank of Turkey, which is one of the major regulators here, banned crypto payments by April 2021. And then in Turkey, you cannot buy and sell anything with crypto. And donations, however, seems to be a little bit of gray area for this, because the community is not 100% sure that donations are considered as payments, so nobody was moving into that space. But with the earthquake incidents, there has been a huge pressure from the crypto community, not only in Turkey but globally, to somehow donate to the victims of this severe event. And then a rock singer, Haluk Levent, just pioneered the process here. He said that there is a huge demand for him to open some wallets, because he is also the founder of one of the leading humanitarian relief organizations here in Turkey, a non-profit one. And he is one of the most trusted people when it comes to humanitarian efforts in Turkey. So he pushed the limits a little bit. And then he got a clearance from the Financial Crimes Authority here. And then that started the process. And then the local exchanges opt in. Some local exchanges also got clearance from the authority as well, and they helped other nonprofit organizations to open wallets. And then suddenly, nearly all the nonprofit organizations in Turkey who are actively involved in this process started to open wallets, including the Red Crescent, which is governmentally led largest humanitarian relief organization in Turkey. And then the gray area becomes much more clear area for the donations. And as you have already mentioned, this is a very important process for the crypto industry here, because as you have already said, it is a really good chance, not only for Turkish community but the global community to show a really good utility of crypto, which is something that we desperately need after all those incidents like FTX crash or other unfortunate incidents. So I think as you have said, I think the donations exceeded like 3 million, and it is still counting. And I'm sure that this is going to be a great example for the use case of crypto.
You know, it reminds me a little bit of some of the relief efforts we saw in Ukraine, which was, or even for funding some of the war efforts in Ukraine, where crypto played an important role. Has anybody articulated why crypto specifically, like why crypto is better in this use case than more traditional forms of aid?
Right. There are a couple of reasons for this. For instance, the first reason is that Turkey has a very vibrant crypto community. So if we can provide some familiar methods for these people to contribute to these donations, it will be much more easy for them to donate. And also, speaking of Turkey, there is a huge Turkish diaspora, especially in Europe and also in US as well, in some Asian countries as well, and they would like to donate. They are very much active in those kind of donations. However, the conventional systems, sometimes the transactions can be very costly when we consider with the cost efficiency of the crypto donations. Especially when it comes to micro donations, the small amount donations, sometimes the cost of transaction is nearly at the 100% of the donation as well. So this crypto is also very much efficient in terms of cost of the transaction, in terms of micro donations. And also, Emily, there's a cultural aspect to this. In Turkey, people really want to stay anonymous when it comes to donations. It's a cultural issue. It is like your your left hand doesn't know what your right hand gives, kind of a situation. So I think this is also very good for the cultural fabric of the local community and the global diaspora as well.
Nonetheless, the current administration is not exactly a friend of crypto, as you've noted. So despite this being a prime use case for crypto, and the amount relatively is it's still under 10 million. Do you think that after all is said and done, and once the rubble is clean and the reconstruction begins, do you think that there might be a change of heart by the administration and it'll go back to being hostile to crypto, given the threat that it might cause the situation with the lira itself and with some of the policies, monetary and fiscal policies of the government?
Right. Hopefully it is going to open new doors, I believe, because in April 2021, when the central bank banned crypto, the main reason was crypto is not very trusty, and there are some very significant gray areas. But I think this is going to be a really good use case, because when it comes to donations, you need transparency, you need much more accountability, and blockchain technology itself is naturally providing that. So I think there is going to be a very strong trust factor for the blockchain technology itself with this use case, and I'm hopefully that this is going to open new doors for different areas and applications of the blockchain technology as well as the cryptocurrency ecosystem in Turkey. So I'm optimistic about that.
Now, cryptocurrencies, of course, do well in places where there's economic instability. Is there a fear in Turkey that the cleanup efforts and and some of the aftershocks, even though these events didn't occur in Istanbul or Ankara or Izmir, nonetheless, that these kind of this kind of effort to clean up might cause economic instability in Turkey?
Actually, when you look at the level of the destruction, especially in those cities, it is going to cost a lot of money for the reconstruction. So I believe that Turkey is at the edge of reconsidering all the budgetary actions that is going to happen in the upcoming months. And I think crypto will be a positive contributor to that. So as much as we are reading from the news, government is mobilizing a lot of financial resources for this and for the construction efforts that will follow up these cleaning efforts as well. So I think it's not going to be easy, but Turkey has gone through a lot of very substantial or very unfortunate destructive events like this in every 20 years or 30 years. So, and we have always managed to somehow get over with those things. So I think, of course, it's going to be difficult, but I think we will sort it out.
And Serdar, do you have an idea of when these millions of dollars in crypto donations are coming in, how they're being distributed? Are they being converted immediately to Turkish lira and, on a local exchange? How is that being distributed to provide aid to people?
Right, Kristen, that's a very valid question. It is not 100% clear yet, but all those wallets are opened by the local exchanges here, as well as the global exchanges like Binance and other ones. So as much as I heard, it is going to be exchanged by the local exchanges here, but the Financial Crime Authority and the local exchanges are still working on this, how to make it happen in the practical environment.
All right. And you mentioned a musician, a celebrity in Turkey, Levent. He managed to tweet out the addresses of 3 new crypto wallets that people can donate to, but shortly after his tweet, accounts began to pop up on Twitter with their own crypto wallets linked, claiming to be charities helping the victims in Turkey. One account was using the same name and logo as the NGO that Levent runs, called Abab, which helps victims on the ground in Turkey. Any tips to avoid these kind of scams?
Yeah, unfortunately, these scams happened just right after these relief efforts have been announced. It's very unfortunate to hear that, and even Levent and the community here really reacted very aggressively against it. Of course, the financial literacy when it comes to the crypto currency ecosystem in Turkey is not very high. I have to admit that. So people can just check those accounts, those wallets from different sources if they are genuine wallets, and also they can go and check the social media posts as well. So it requires for focusing on some details and try to understand which of these are genuine and which of these are scam. But Kristen, there is a very active crypto community here in Turkey. If there is a scam around in a second or two, many people just go there, leave comments, and they just go and try to warn people. So of course there are some scammers around, but I think the efforts of community will be a really good way of getting these people out of the picture.
All right, Serdar, thank you for joining us, and much, my prayers go out to you all in Turkey. I hope for a quicker recovery. That was CoinDesk Turkey Editor-in-Chief Serdar Turan. Coming up, we've got a crypto markets update with Fidenza macro blog author Geoffrey Chen after the break. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XGX index currently at $23,061, up about 0.3%. The CoinDesk Ether price ETX index at 1670, also in the green, almost 2%, and the DFX CoinDesk DeFi index is at 145, advancing about 2.4% for the day.
And joining us now to discuss the crypto markets is Fidenza macro blog author Geoffrey Chen. Welcome, Geoffrey.
Hi. Thanks for having me on.
Love you. So things haven't really moved relatively since Fed Chair Jerome Powell used the word disinflation yesterday. No big surprises. The markets really did, at least the crypto markets, that things were a little bit different in the equity markets. But that also happened way after Fed Chair Powell said what he said. Is over this whole waiting, let's hear what Powell's going to say. Let's see what the Fed's going to do. Why? There are no surprises. So where are we going here?
Yeah, in his interview, he didn't really offer anything new, and that's why a lot of asset markets didn't really move that much. In fact, this year I think we're going to see a lot less volatility and uncertainty as the Fed enters the last part of its hiking cycle. They've said that they want to hike to 5.25, and they're probably going to get there. So the move ever since last Friday's non-farm payrolls number was basically just closing the gap between market expectations of the terminal rate and where the Fed thinks they're going to go to. So from here, I actually think that yields and expectations of the terminal rate are going to be pretty stable.
And you also see volumes are kind of going to be not what they were last year. I think you view volumes in 23 that you think that'll be a lot more muted compared to what we saw. Do you see as for crypto or the risk on trade, if you will? Which is it? What do you think is it that there's a lack of enthusiasm for crypto, or do you think is that people are reluctant to take on a risk on trade with higher interest rates?
Yeah, actually, I think sentiment got really depressed last year. And ever since December, we've actually had a number of bullish drivers. We've had China reopen. European energy crisis has kind of abated, and economic data is actually improving in the US, Europe, and in Asia. So things are actually looking a lot better than they were 3 months ago. The Fed is close to the end of their hiking cycle. So I actually think we're in a Goldilocks scenario where the threat of a recession is definitely receding. I don't think we're going to start to have another economic boom, but we're definitely going to be in the steady state, which is actually really good for risk assets. So in 2019, Bitcoin rallied from 4,000 and did 300% from there. And that was a classic Goldilocks regime in global macro.
All right, so you say Bitcoin and Ether futures on exchanges is nowhere close to the highs reached in 2022. Also, back in January, you posted on Substack about your core view for crypto, writing that we are near the bottom of what will be a multi-year trading range. So I'm just wondering what your expectations are for February and by the end of the year.
Yeah, so, about the volumes on exchanges, I do think a lot of capital has left exchanges, and I do think that people are getting exposure just through spot, unleveraged spot in their self-custodied wallets. And therefore, there's a lot less leverage in the system, which was traditionally, focused on exchanges. I do think that we are in a very large, wide trading range, and we could start to retest the upper end of the trading range. I don't think we're going to break new highs in a lot of coins, but I do think that just by retesting highs in, let's say, Bitcoin or ETH, that's a good 200-300% from here.
All right. You're also watching the MOVE index, which measures market expectations for bond volatility. What are you seeing there?
Yeah, that's right. So the MOVE index got really elevated last year because bond markets were selling off. The Fed was hiking aggressively, and obviously bond volatility had to go up. And now that we're near the end of the hiking cycle, the MOVE index is starting to trend lower. And you could see that historically, every time the MOVE index has trended lower, equities have tended to do well. On the bottom there is the S&P 500, and on top is the MOVE index. And every time you see that MOVE index go down, equities go up. And I think that this downtrend in the MOVE index is going to be good for risk assets. And there's a lot of room for that index to go down.
All right, great. Geoffrey, thank you so much for your insights. That was Fidenza Macro blog author Geoffrey Chen. Meanwhile, FTX was funded by well-known investment firms, including Sequoia Capital, Tiger Global, and others. Now that the crypto exchange has gone bankrupt, should VCs be treated as victims, or do they hold a degree of accountability? Well, joining us now to discuss is Tal Elyashiv. He's the co-founder and managing partner at Spice VC. Tal, thanks for coming on the show. You wrote an opinion piece for CoinDesk titled "Why Venture Capitalists Won't Be Held Accountable for Investing in FTX." Maybe you can give us a little explainer of your thoughts.
All right. So, it's really important to start by saying this does not absolve VCs from responsibilities for decisions they make. I mean, as VCs, we have responsibility to our investors to make the best decisions we can, to do good due diligence before we make investment decisions, and to consider risks and make informed decisions. That doesn't mean every decision is perfect, right? We do make mistakes, and good VCs make much more good decisions than bad decisions, and end up coming much more ahead as a result of that. I think that the question or the article was written as a result of the SEC looking into the investment companies that invested in FTX and their due diligence process and whether it was consistent with their stated processes. And there were rumors that the SEC may also change regulations, so VCs may be, or investors in general, investment managers can be held accountable for negligence and not for gross negligence as they are accountable for now. That was the source of the article, right? And my opinion is that nothing will change in the current regulatory framework. And the reason is, first, investors in VC funds are usually either institutional investors or professional investors, which require less protection than retail investors require because they can do much more due diligence. The other thing in play here is that investors in VC funds, the LPs, have a choice whether to stick with a VC fund or change VC funds. And if they're not happy with the way a VC is making decisions, they can vote with their feet, so to speak, and invest in other funds. And I think that the last reason I was listing here is that because most investors in VC funds are institutional investors, even if the regulation will change and VCs can be held liable for negligence, which has a much lower threshold than gross negligence in terms of proving that, it will open them significantly to lawsuits from, in theory, any decision that they make that investors are unhappy with. This will, as a result, increase significantly the cost of making decisions. It may impact VC fees to investors. It will be pushed on investors at the end of the day. And in reality, investors are not going to take advantage of it, because if you think about institutional investors, if they take advantage of that right, they get a reputation of a happy trigger on litigation investor, and they will not be accepted to any VC fund.
Just to kind of go back to FTX for a moment, because this is kind of like one very famous example of sort of VC, I don't know, being asleep at the wheel, it seems like. What most simply, in your opinion, happened there? I mean, was it basically just like VCs didn't do due diligence, or they did due diligence and they just kind of didn't care? Or why did we see this situation where we have some of the biggest names in venture capital kind of seeming to just not really see these signals that were apparently quite disturbing?
Yeah, I totally agree. And it's important to say it wasn't just FTX, right? There was Celsius before, there was Terra Luna before, there was BlockFi, there was a bunch of others, Genesis, and so on. So it's not just FTX, but FTX, I think, turned out to feel like the mother of all weird things that happened in VC in crypto investing. And yes, it's really easy in retrospect to be smart and to say there must have been red flags, but it's kind of a little bit unfair to play Monday morning quarterback. My thought is that what happened here is not the first time that it happened. Think about the .com era. It happened then exactly the same way. Many VCs, many known VCs invested in companies that in retrospect they shouldn't have invested in because there was significant pressure to invest in .com companies, and the period for making investment decisions got compressed. And so that's one thing. There was kind of pressure from the market to invest in crypto unicorns. And I think there was a lot of groupthink here, potentially, a lot of pressure from the market to invest in such companies. And as a VC that is in the same market, Spice invests in blockchain ecosystem companies. Over the last 2-3 years, the time available for VCs to make investment decisions have compressed dramatically. So there's much more pressure for making decisions. It's not a good excuse. And it is, I think, beginning to happen again with generative AI companies that are now the new shiny object, a la ChatGPT and OpenAI and so on. I think we may see the same thing again. But I think that some of the big names might have learned a lesson and will pay more attention. Some, if you look at SoftBank, they already have a reputation for making interesting investment choices. So
so a couple of things. First of all, any kind of investigation in all of this, what's the ultimate is that they may have defrauded investors potentially, in the worst case scenario for the VCs, that they promised a certain type of investment and in fact did something different. You're shaking your head no, and the second part of this is, does this sort of bias, a bias, if you will, almost outsourcing the due diligence part of what a VC should be doing? Does this have a bigger effect in general on the type of startup or the type of company that VCs tend to invest in? In other words, Sam Bankman-Fried kind of fit a stereotype of what a startup looks like. It's a new, fresh technology, a young kid under 30 with weird hair, but has like the MIT credential, and other types of investments, maybe with an older founder. Maybe a founder who didn't go to a top school, but nonetheless may have some experience. those kind of investments get overlooked. Do you think that this sort of brings to light the sort of biases that VCs have?
Maybe, but I really don't think it's the case. I think that first, the SEC was looking into this not so much because of it suspects wrongdoing on the VC side. I think it was more trying to understand if more protection is needed for investors. Because one of the things that happened with FTX, and this is why it drew so much attention, is that a bunch of pension funds ended up investing in FTX and losing money that was critical to investors, not necessarily sophisticated investors. So the look was more whether more protection is needed. There was no benefit to VCs from making a decision that didn't work out. So that's one thing. About fitting the profile, probably. I mean, it probably impacted some of the decision. I think there are other factors involved as well. Investing in the blockchain arena is, in my mind, more complicated than investing in some other domains, simply because the technology keeps evolving, the business models keeps evolving. And also there was a common belief, which I don't subscribe to, that there is this magical economy that can create something from nothing. So something doesn't get created from nothing. Not in my world, anyways.
But as well, does this tarnish the VCs that you said that they most likely won't get punished here? But do you think that this at least shows how these VCs that invested here, do you think that they're tarnished from future investors going into them knowing that they don't do due diligence properly?
You know, at the end of the day, it's very hard to make a decision about a VC based on one investment decision. I mean, Sequoia is considered a very good VC. There's a bunch of others. It's not just big, it's also good if you look at results and so on. So I don't think so. I think it's a kind of a black mark that they will have to deal with. But first, investors don't leave VCs that quickly. These are long-term decisions. And second, this is not the only investment decision they've done in 2022. Yeah. They made many decisions, and I think at the end of the day, investors will choose based on overall results, not based on one decision that was made.
Well, Tal, we got to wrap it up, but thank you for joining us. That was Spice VC co-founder and managing partner Tal Elyashiv. Coming up, we'll check in with Global Policy and Regulation Managing Editor at CoinDesk, Nick Day. Super Bowl Sunday is coming up this weekend. Last year's Super Bowl was so overrun with crypto ads, including from Coinbase, Crypto.com, and FTX, that it became known as the Crypto Bowl. Following a year of crypto price collapses and a wave of industry bankruptcies, plus with layoffs rather than expansion the norm, it's been a stark change for digital assets. Joining us to discuss is Thomas Perfumo. He's the head of strategy at Kraken. Thomas, thanks for joining us. So how is Kraken doing in the wake of the FTX collapse, and what do you see as the future of centralized exchanges in its wake?
Yeah, so Kraken specifically has had no material exposure to all of the volatility in the industry when it came to centralized firms collapsing throughout 2022. So we're in a pretty, I would say, privileged place, and it's really born out of how we've approached our business model over the last 10 years. Constantly focused on earning our clients' trust every single day, day in, day out, through things like proof of reserves, even before it mattered back in November in the wake of FTX's collapse. I think from our perspective, we're just focused on that long-term vision to increase and accelerate the adoption of cryptocurrency, and we're just focused on delivering a great client experience in the meantime. But this year in particular is going to be a year where we think we really need to step up and help rebuild a lot of the trust and reputation within the industry at large in the wake of FTX's collapse.
Sure. I mean, in the industry, we've seen a wave of layoffs, offices closing among various crypto firms. And in Kraken's case, recently they closed down the Abu Dhabi office less than a year after securing a license in the region. Also, last year, the company announced laying off about 30% or 1,100 of its staff. So, I mean, was that part of dealing with crypto winter, crypto contagion? And what's the strategy going forward?
Yeah, so the decision around the global workforce reduction was independent of any kind of event like FTX specifically. It's really following the broader macro trend. Of course, we see this, a lot of these actions in the broader tech environment as well. And so we're not insulated from the broader macroeconomic environment. So of course, crypto winter in general has definitely had an effect on the business, and we're responding to that. Our choices to close down some of these offices is really born out of the notion of we're trying to focus and narrow our scope over the coming years as we weather this winter and focus on what are the parts of the business that we think are going to drive the greatest amount of impact, again, along that vision of accelerating the adoption of crypto. And that was really the driver behind Japan as well as Abu Dhabi. These are really small parts of our business, and we're really just hunkering down and focusing on the big core parts.
There's been a lot of bankruptcies, of course, in crypto over the past year, Voyager, of course, being one of them. We don't hear much about Kraken picking over the remains like vultures. Why not? Why are you guys not trying to gobble up some of the assets of these other companies? Is it too expensive, or is there a problem with them, the kind of issues here?
Sure. I can't discuss any kind of specific asset in particular that we've taken a look at in the past, for example. These opportunities do come up, of course. I would comment that with these cases, it's quite complicated. So a lot of these business models, the reason why they failed is because they were outsourcing critical components of their business to a third party. So for example, in the case of Voyager or BlockFi, they had a lot of exposure to a hedge fund like Three Arrows Capital, for example. And Kraken has approached our business in a much different manner, where we've vertically integrated most of our different business lines. So for example, if we offer staking, we own the infrastructure in many cases to provide that service to our clients. We're not dependent or reliant on third parties that might have some kind of critical failure or taking excessive risks. And so when it comes to looking at these assets, of course, on a case-by-case basis, it can be quite different. But when you talk about these firms and how they collapsed and whatnot, there's of course a lot of liabilities that you have to take into account. And so it's not as simple as just paying a price and buying a whole bunch of accounts. There's a lot of other stuff under the hood that you really have to take into account from a regulatory perspective, a compliance perspective, and a liability perspective.
Oh, by the way, I think you're on mute. Well,
you mentioned that you were cutting back on some of your international operations in order to focus on what you say are your core businesses. Just to be clear, what are those core businesses? I mean, what are you doubling down on as you cut back on other things?
Yeah, so our core areas or regions that we really capture a lot of market is going to be in Europe in particular, but we also have a pretty large business in North America. We are a global company in scope, so when you hear about these more regional shutdowns, we're talking about limiting the depth of our servicing. So in some cases, we might not offer access or funding with the local currency. However, you might be in a particular region where if you have access to Bitcoin, you can still deposit that Bitcoin to Kraken and use some of our other services where it applies. So it is not impossible for people around the world, even though we might not have a local presence in any specific country, to access Kraken services. So when it comes to, again, like those core investments that we're making, we're starting and focusing on the biggest regions, which are Europe for the most part, but as well as North America. And we're also providing as much as possible global access to our services where applicable.
All right, Thomas, thank you for joining us. That was Kraken Head of Strategy, Thomas Perfumo.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
The SEC is at it again, saying that crypto assets are often unregistered securities being traded on unregistered exchanges. What's that about? Well, let's find out. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of the absolute required reading of CoinDesk State of Crypto newsletter. Good morning, Nick.
Hey, good morning.
All right, SEC, why are they saying this? They really like poking at the crypto community. Not that they're wrong, potentially, but, securities. Who are they? What are they saying here?
Yeah, so yesterday the SEC published an investor advisory warning, basically, saying that self-directed investment retirement accounts, IRAs, should be careful. People should be careful if you're putting your money into an IRA that has crypto exposure to it. A part of it, as you noted, is the kind of ongoing concern that a lot of cryptocurrencies might be securities and therefore subject to the SEC's purview. And the SEC has expressed concerns about these, cryptos, potential securities or alleged securities, however you want to describe them, not being registered, about their issuers not being registered, about the exchanges not being registered. So part of that, I think, is just kind of, this ongoing effort to sell, investors, hey, we're concerned about this thing that, you're putting your retirement money into. Be careful. The other half, of course, is, yesterday the SEC also put out its examination priorities for the upcoming year. And crypto actually had a, much bigger presence than last year. And so, reading between the tea leaves here, it seems that the SEC is maybe actually gearing up to do a bit more on crypto this year. Whether that's clarity and guidance or whether that's more enforcement actions, probably too early to say. But, for the last couple of months, we've been hearing more and more hints from SEC officials saying like, hey, yeah, we're actually going to, tamp down on this Wild West thing here.
All right. We'll see how that develops. Nick, thanks so much. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Emily, Lawrence, thank you so much. I'm your host, Christine Lee, and happy birthday to us. CoinDesk TV turns 2 years old today. Meantime, we got the hash coming at you at noon and all about Bitcoin at 3. It's been 2 years. You're watching CoinDesk TV.
It's teething.
Next up, stay tuned for the daily forecast to see what's happening in the age of crypto markets right after this break.
After the mess of last year, 2023 could be when we finally get big changes across the world on crypto rules. While we're waiting to see what happens in the US, though, other countries are already pushing ahead. The shockwaves from 2022's huge crypto scandals are still being felt everywhere. FTX, of course, is the biggest, and there's likely to be a lot more to come on that. But things like Terra Luna continue to impact markets and businesses everywhere, and a key part of this impact is on regulation. Countries everywhere are beginning to catch up to crypto and blockchain technology more generally, and they're setting rules to try and protect consumers. It's a trade-off against stifling innovation, however, in some of the most exciting parts of the global economy, and not everyone agrees on the same route forwards for these regulations. So with that in mind, we're going to take a closer look at what's changing in a couple of these different jurisdictions at the start of 2023, namely South Korea, Australia, and a look at the latest on what's going on in the US as well. So let's start with South Korea. The government there is already moving forwards with plans to define which cryptocurrencies can be called securities. That is a part of a move to determine which regulations would therefore apply to them. The move is part of an ongoing review of digital assets in the country and comprehensive regulations as well for the sector. The country's Financial Services Commission has said that it's necessary to minimize the uncertainty of determining whether or not one is a security. It added that it will prevent the possibility of law violations and it will protect investors. These guidelines basically say that blockchain-based tokens will be treated and regulated as securities if they have the corresponding characteristics that are already laid out for securities in the country's Capital Markets Act. The Alliance of Local Crypto Exchanges in South Korea have reportedly said that they will cooperate with financial authorities on this moving forwards. One big positive for them is that the government have said they will let these exchanges define which currencies are securities. Now, some have welcomed this move, suggesting it brings clarity that could help give the sector in Korea a competitive edge, and that includes experts like Lee Jang-woo of Hanyang University.
여러 면에서 이번 STO는 이제 특히 한국 같은 경우는 하나의 어떤 트렌드로 할 정도로 좀 파괴력이 있는 하나의 가이드라인이었던 것 같아요. 그게 확실히 국내 시장은 그런 유틸리티, 우리가 알고 있는 일반 코인과 증권형 코인, 토큰 증권이라고 표현하죠. 요가가 확실히 좀 분리가 되면서 그 각각의 생태계가 만들어질 것 같다라는 조금 생각. 그것에 대한 관리 책임에 대한 주체를 거래소와 발행인한테 줬다라는 거는 아직 명확하지 않은 상태에서 어느 정도 유연성을 줬다라고도 볼 수 있어서. 그리고
Now, none of this is hugely controversial. In fact, it's largely similar to what many other countries are leaning towards elsewhere. But by pushing ahead with this move sooner than many of those others, South Korea could gain a couple of advantages. On the one hand, it has the potential to influence the decisions that many other places might make afterwards. But by also giving clarity to the crypto sector, it could also help grow it. Here's Lachlan Feeney from Australia-based Labris.
So there are certainly some jurisdictions that are, looking at that and seeing that opportunity and wanting to set themselves up as sort of a hub for blockchain companies, for blockchain startups to be founded in and grow and those sorts of things. There's a second sort of race going on, which is in the wake of a lot of the sort of blow-ups last year. And so I think a lot of jurisdictions are afraid of being made to sort of look like fools.
Now, Australia is trying to do something similar. The federal government there have just launched a consultation on token mapping. The idea is to identify key activities and functions of products in the crypto ecosystem, and the government will then, quote, map them against regulations that it already has to see what works and maybe what doesn't. Now, Australia's politicians say their biggest concerns are keeping consumers safe from some of the most volatile parts of crypto. Here's Australian Senator Andrew Bragg.
In my view is that we are in a global race for investment. We're in a global race to keep the investment that we have in the country, but we're also in a global race to show how consumer protection rules can be established.
Now, Bragg has already said that Australia has lost what he called the great race for crypto regulation. Clearly, he wants things to move faster, but not everyone agrees a slower timeline is necessarily a bad thing. Whereas an expedited process is seen as potentially helping places like South Korea, there are also benefits to not hurrying.
Personally, I think the longer the better. I think if they try and rush this or turn something around too quickly, it's more likely to go wrong than right. So I don't think the industry is in any sort of huge rush.
The elephant in the room in all of this, though, is what's happening in the United States.
From crypto king to criminal suspect, Sam Bankman-Fried's stunning fall has just gotten worse for him.
So now bankrupt FTX is asking politicians to return donations given to them by Sam Bankman-Fried.
In the aftermath of the FTX scandal, politicians are still trying to figure out how to handle making rules for crypto. There's a series of different bills supposedly being considered by Congress, but the SBF saga has cast a shadow over all of it. The sponsor of one of these bills, Republican Senator John Boozman, told Politico in November, quote, "Right now, people are trying to figure out why it has imploded. You don't really know what the changes are until you know exactly what's happening." Now, at the heart of the debate in the US is whether cryptocurrencies are defined as securities or whether some are defined as commodities.
So the securities, at least in the US, are regulated very differently and it's probably fair to say more harshly than, say, commodities. So there's a lot of crypto assets that are very concerned in the US about being labeled as securities. And would much prefer to be labeled as commodities.
While countries elsewhere might want to push ahead with their own agenda, ultimately what the US decides probably matters more than anywhere else. Here's Caroline Malcolm from Chainalysis telling forecasters much last year.
We've seen other countries move ahead of the US in terms of actually putting a defined framework in place for digital assets. Certainly the US, though, continues to be a very important player, particularly on the international stage where a lot of these global standards are set.
The issue with all of these differences is that it will likely leave the world with a lot of discrepancy when it comes to regulations governing crypto. And for assets that exist beyond the control of any one country, that can create opportunities, but it can also create potential problems as well. The bottom line is, change is coming this year, and it will fundamentally alter the crypto landscape for a long time to come. Alright, that's it from us for this video. Do like and subscribe if you want to see more content like it, and please let us know what your thoughts are on regulation and what's happening in the US and Australia and elsewhere in the comments below or wherever you're watching this video.